Hello and welcome to another update video about Ethereum. So yeah, let's have a quick look at the 4-hour chart. The view of the chart since June reveals that Ethereum generally looks more bullish than Bitcoin. I am bullish on ETH. I've always been talking about that because compare it with which doesn't mean we couldn't get another low. I mean, likelihood would suggest if Bitcoin makes another low, ETH will make one as well, even though, and that's the main reason why I'm saying I'm more bullish on ETH than BTC, and the ETH BTC chart reveals that as well, at least sort of medium term. Here in November, Ethereum did not make a new low. It did not make a new low. So Bitcoin did, right? And that just is evidence that not every chart has the same structure and not every chart follows Bitcoin. So that's the scenario here. Wave 1 to the upside into August, wave 2 to the downside in November, and then another 1-2 setup here and another small 1-2 setup here. So it's, what else are we waiting for? We've got the best evidence. That at least we are in possibly a tradable uptrend. Now, don't get me wrong, this doesn't mean we are in a bull run. All of this could also be an Elliott Wave triangle, for example. For example, here A wave, B wave, C wave, D wave, E wave, which could still make another low. That will take a few more months to play out. But does that help your trading? I mean, I often get questions: could it be this? Could it be that? It could be so many stuff. It could be so many different counts are possible here, but we have to take it level by level, and we have to use the Elliott Waves not to figure out hundreds of possibilities, because that doesn't help your trading. I mean, in the end, it's nice to try to predict all sorts of patterns, but what is really, in the end, I'm trading to make money, and I hope you as well. Now, trading is not for everybody, but if you are trading, then we need, as a trader, our job is to identify the trend, tradable setups. And now if I try to identify here triangle, it doesn't really help me because it will just move sideways. So we are looking for a tradable trend, and the trend is up because we had here of the June lows, 5 waves up, 3 waves down into November. 5 waves up into February, 3 waves down into March, 5 waves up here in this latest structure in March, and also 3 waves down. So we have the trend up very, very clearly. And that's also why I'm rather bullish on ETH. Which doesn't mean I wouldn't consider that this whole thing can break, but it's all a question of how are you trading this. And what do you make out of this, in terms of tactics? So if we zoom in a little bit, we can see that of the March lows, we did obviously rally in 5 waves, and we came down in 3. We hit the support area. We had some really good setups here. Again, just from a tactical point of view, I did buy quite a bit in here in the green support area. Already took 40% of profit somewhere up there, just because as a trader you need to pay yourself sometimes, but I did keep a strong core. I did keep a core because there is a real potential that we could now be in the third wave that takes us to $3,000 plus. Why is that not unlikely? I also showed you that. That is because if we measure the length of this wave 1 back in August and we compare it to the length of the wave 1 that happened between November and February, then you can see that this is below the 61.8 extension. If this 5-wave move, basically the first wave of the third wave, is below the 61.8 extension, or at least below the 78.6 extension, which I don't even have on the chart, but it's below that. That is normally a really good signal that we are actually already in a third wave. Now, it's a very early signal and no guarantee, but it is a signal. A signal is not certainty, but a signal is, points towards probabilities. Okay, so just be aware of that. So I can't say it more clearly. For me, the trend is up. From that point of view, when I'm selling here anything, I'm only doing it from a perspective of, right, I've got lots of ETH already, because I also bought in the bear market. I bought here, I've got my previous positions. So I've got ETH on the hardware wallet. I've got a core trading position and I'm happy with that. So that's why I tend to take some profits up here when we head into resistance, but I would never sell everything. So it's all about scaling in, scaling out while sitting on a comfortable cushion of let's say, positions on the hardware wallet plus a core position I bought in here. In terms of now adding in, now I always try to make it easy. I published, in the channel membership, I publish audio lessons sometimes. And one of the last ones was taking the lazy approach. So trading isn't easy, but you can make it easy for you. What I'm going to do when we come down again, because there will be pullbacks along the way, it's all about scaling in. I like to do this stuff, scaling into support. The support goes down all the way to 1218, and I'm going to add, as we go lower, larger position size as we're heading towards 1218, and smaller position size higher. And then eventually I might consider even getting stopped out or taking positions out below 1218, because that is when we have a real risk that it could go all the way down to 1,000 and maybe continuation with a bear market. But 1218 is the key level against which we can continue to rally higher in the third wave. Only below 1218, it's getting unlikely that the upside setup is still going to work out. But there are a lot of support levels along the way. Okay, so we always take it level by level, but that sort of would be my approach to add, scale in. I'm not using leverage, very little leverage if I use any. That sort of has helped me to protect most of my funds, certainly, because a lot of people who are over leveraged, you can't plan properly. You are probably emotionally driven oftentimes, because you are in oftentimes people are in over leveraged position, too much leverage. So that is nothing that you need to be comfortable with your position and risk. So anything else? So and obviously on the way down, scaling in means I accept that not all of my positions will be filled, but that's fine. The experienced trader doesn't necessarily want all positions to be filled. And it doesn't matter, because if not all positions are filled, it actually means that the trade works in your advantage. Why is that? That's just purely because, let's say the price is coming down, you add in here, scaling into support. The price reverses after 50%. All of these positions here are not used. You have too much cash available, basically. Too much cash. Not all positions are filled with the cash you have. But it doesn't matter. You can be happy because the price already turned up earlier. So at least you are already in profit, right? So it's basically win-win here. And now I'm not telling you to do that. That's just sort of how I plan things normally. And then again, there are hundreds of setups every day. So it doesn't matter if one position doesn't get filled, right? Okay, and then just that was a bit from a tactical point of view. Now let's zoom in a little bit. Take a look at the structure here of the March lows. We did rally here in 5 waves, came down in 3, hit the support area. We are now rallying again, but we headed into resistance. Heading into resistance, and it could very well be after 3 waves here that this is just an overshooting B wave, especially as we did not break above 1849. A break above 1849, breaking and sustaining, will make this overshooting B very unlikely, but a lot of coins are currently probably doing this kind of overshooting B wave, or at least the potential is there. So people need to consider that in their approach. For example, how do I approach that, or how do I consider that? Well, I took some profits, right, to pay myself, because I don't want to lose all of the money I made this week, or last week it was, no, this week. Because when I bought down here, made a lot of money on the way up, so I took some profits. So I don't want, in case it comes down, I don't want to lose it all again. So that's sort of the mindset, right? Not trying to maximize necessarily everything, but taking profits along the way. What you need to do as trader, But now just waiting for basically the pullback. Okay, so that's sort of the plan for me at least. And we can push a little higher. If we go above 1850, as long as we're holding 1730, let me just double check that. I think it's 1737. As long as we're holding that level, no, it's shifted now, 1742, but the difference is marginal. So as long as we're holding 1742, we can get that 5th wave to the upside. If we get 5 waves up, I would expect again a 3-wave move down, higher low, scaling in. Okay, same story here. We came down in 3 waves, we hit the support area, ideal for scaling in. Only a part of the position would be filled, because if you scaled in here in a triangle formation into this support area, only basically one position possibly got filled. But that's fine, it's still in profit, right? So that's sort of the game. That's how I found it. You can win in the crypto market because it's not easy to trade. It really isn't. But yeah, that's the situation. We can, at the moment, we can still look forward to a possible C wave to the downside. Now, I'm not telling you it will come down, yeah. But we have a move down, that's likely, and we have continuation to the upside likely. But after this fifth also, I'd be expecting a pullback. Yeah, one more thing to mention here. The trend is clearly up against 14.59 in the short term and 12.18. Okay, so that means on the way up, I would never sell all of my positions because the trend is up. I don't want to sell into the trend too much because, eventually we are here to let the bull run maximize our portfolio value. So that's one thing. That's why I always highlight scaling in, scaling out. I'm not an all in, all out person. And also always bear in mind that I'm showing you here different scenarios oftentimes. And if I highlight that one scenario is less likely than the other, or even rather unlikely, it doesn't mean it won't happen. Even if I have 3 scenarios I show you, they are all highly likely. But among them, one is unlikely and one is likely. Yeah, one is maybe rather likely. But bear in mind that these 2 or 3 scenarios I show you, they are already highly likely scenarios compared to the theoretically infinity of possibilities that is out there, because the market can theoretically do anything. But my task as an analyst is to identify the 2 or 3 most likely scenarios. Now, among them, you will have an unlikely one and a likely one. There could be one where I say roughly, I mean, that's just made up now. But for example, if I say 40% probability the price will come down into this region, 60% it will continue, even though I wouldn't know how to calculate that because it's subjective to a degree. Okay, I mean, you can spend tons of time to try to calculate, but it's more subjective, right? I tend not to give these numbers because people will just blindly try to go with a 60% probability trade, even though 40% is highly likely as well. I always encourage people to think strategically, consider all the scenarios I show you to come out with the best strategy for yourself. Because even if there is let's say, even if it's only a 20% probability to come down into the yellow area, for example, it is still quite likely. Yeah, it's still 20%. It's not 0. So yeah, be aware of that. Yeah, so they are all likely. That's the task and the skill of the analyst to identify those highly likely scenarios. I won't show you anything that is completely unlikely. There's no point. I'm showing you the most likely scenarios, but among them, there are likely and unlikely ones. Okay, that's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.